Let's take a moment, look at the disclaimer. This content is for educational, entertainment, and informational purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the market, how we analyze the markets. This is Rod from BTA, and we are known as the middle traders. Okay, we're going to do a quick end-of-day update on the major index ETFs. The major index ETFs. We got about 7 minutes left in today's trading action. It's 3:53 p.m. on Tuesday, 6/28. Okay, we got about 7 minutes left in the trading action for today. All right, what you're looking at now is a daily chart of the DIA, and I'm going to expand it a little bit so you can see it. And it's not much that we had to discuss. We went over a lot of it yesterday on our our Monday evening meeting at 5 p.m. on browntradingacademy.com. We went over a lot of it yesterday. So it's not much to talk about, just the fact that exactly what we were discussing yesterday kind of played out. What we were discussing yesterday in our weekly meetings on Mondays kind of played out. You see, we got a downward trend in 21-day moving average. You see, yesterday, which was Monday, we closed right on it. And we said that we needed to get above this 21-day moving average conventionally. As of right now, you see, it didn't happen. Okay, we opened up above it, traded up, but it lost momentum, and we have a key reversal day here today, and we closed back below the 21-day moving average, and now we're below the 5 and the 9. That's not good. Okay, if we can't get back above this 5 and the 9 tomorrow, and we continue to close below the 5 and the 9, it's nothing to talk about. Okay, the momentum is clearly to the downside. All right, we start closing below the 5-day moving average. It's nothing to talk about. So the DIA does not look great. Okay, and we had higher volume than yesterday, so that's distribution. All right, now a key reversal day like this. Let me expand this back. We're looking at the daily chart of DIA. A key reversal day like today. Okay, when it opens up, trades up, and then it collapses and trade and closes at the low end of the range. If the volume was above average, then it has a high percentage, high probability that the next 2-3 days are going to be down. But because the volume wasn't higher than average, wasn't above average, above this brown line right here, which is the average volume line, because the volume today was not above the average volume line, then it's a possibility that we could recover tomorrow. But it has a high probability when the volume is higher than average on the key reversal day, the next 2 to 3 days may be down. Okay, but that's not the case. But I just wanted to remind y'all of that. All right, because that's something to look out for when you see a key reversal day, to check that volume. And if that volume is higher than average, it's a good chance that the next 2 or 3 days will be down. But for right now, we just got to monitor this 5 and the 9-day moving average on the DIA. Okay, the volume, okay, like we see on the structural chart before we go to the on-balance volume. See on the structural chart, it basically broke below support, and it broke below the upward trending trend line. Okay, going all the way back from the March 2020 lows. Okay, you can see right here we broke. Let's expand this a little bit so you can see it. You see right here we broke below the support at 312.53, and then we broke below this trend line right here, this internal trend line going all the way back to the March 2020 lows. We broke below that. Look, the next stop could be the 306.28 and then the 305.26. So we start breaking back below that, then I wouldn't be surprised if we don't come back and test these lows at 295.95. So right now we got to see if we could get back above this internal trend line right here and back above this previous support, but now it's resistance at 312.53. That's what we're looking at on the structural chart. But the key moving averages, hey, you see we got to get back above that 5 and the 9, okay, and then we have to get back above that 21-day moving average, which is at 313.97 at this moment right now. Okay, so now let's look at the that's the DIA. Let's look at the Standard & Poor's. Okay, look at the Standard & Poor here. Like I said, we discussed a lot of this yesterday on our Monday meeting. Okay, but as you can see, the Standard & Poor did the same thing as the DIA. Okay, we broke back below the 21-day moving average, and we broke back below the 5 and the 9. Now we closed below the 5. Well, it looks like we're going to close below the 5 and the 9. It's only 2 minutes left in the trading session, and we below the 5 and the 9 right now. So it looks like we're going to close below the 5 and the 9. Okay, so that's not good. It's nothing to talk about. And we got distribution here on the SPY. This is the SPY, the ETF that tracks the Standard & Poor 500. So we got higher volume than the previous day on a down day, so that's also distribution. Okay, so the SPY is really nothing to talk about. We're below the 5 and the 9-day moving average. We're trying to hold support, okay? We're trying to hold support right around that 380.54 level, okay? Right around the 380.54 level, but you can see we broke back through some key support levels today, all right? We broke through some key support levels today. We broke through this internal trend line right here. We opened above it, traded above it, but we broke back below it. And then we broke below this support level at 384.94. So now we're sitting right at 380.54, okay? The price action right now is 380.61, and this support level is 380.54. We break below that and break this here internal trend line right here. I think the next stop could clearly be 371.63. Okay, so 380.54 is the level we got to hold on the structural chart for the SPY. Okay, let's take a look now at the Qs. Okay, the QQQ, the ETF that tracks the Nasdaq, specifically the Nasdaq 100. Okay, all right. The session just closed. That's our alert for the end of the trading day, and basically we closed down pretty hard today, to be honest with you. Okay, we'll look at that toward the end, but for right now, let's look at the Qs. Let's look at the structural chart real fast. Okay, on the Qs, you can see we broke through internal trend lines today, right here. We broke through this internal trend line right here, okay, which we held support yesterday, but we broke through it today. We traded above it and we broke back through it to the downside today, and then we broke through this other internal trend line right here that's right on top of this horizontal support level at 284.94. We closed today right now at 283.54. So we broke support at 284.94. The next level to look at, area interest, is 280.21. Okay, $3 below that. So I won't be surprised if we trade back down to that tomorrow. We may get a bounce, we may not. But if we break below that and we break below this internal trend line, the next level to me will be around 269.79. This low right here. So we have to monitor this right now. We broke a lot of key support today, a whole lot of key support today. That's not good. We talked about it yesterday in our meeting, so this is not a surprise to any of us, that attended the meeting yesterday. All right, so now look, clearly we broke back through the 21-day moving average and the 5 and the 9. Look at that right there. That's not good. We broke through the 21-day moving average. We broke down below the 5 and the 9. We closed at 283.53. The volume is higher than yesterday's volume. Distribution. Okay. So this is not good. This is not good action. This is not good action at all. Okay. So we're starting to break down. Let's take a look at today we broke down. And that's not what you want to see when we're trying to have a rebound rally and we just got follow-through days on all of the major indexes last week. It's not, we don't want to see this kind of action right at the follow-through day. It's not good. Okay, so let's look at the let's go to the IWM real quick. Okay, let's look at the IWM and look at it with our key moving averages. Okay, and you can see the IWM fell back below its 21-day moving average today. All right, so you see that downward trend in 50-day moving average right here in red, but look at the 21-day moving average. We closed on it yesterday. We traded above it. It failed. We came back. We broke below it. Now we're right at the 5 and the 9-day moving average. Okay. Look at the distribution, slightly higher than yesterday. Okay. Well, look at the volume, slightly higher than yesterday. That's signs of a distribution. It's slightly higher than yesterday, but it's still higher. So the IWM doesn't look much better than the rest of them. We broke below the 21-day moving average on all of them. Like I said, that's not good when you're looking at we just had a follow-through day on all the major indexes last week. To see this kind of action at the follow-through day is not that positive, okay? So let's look at the IWM on the structural chart. Well, you see we broke back below this internal trend line here. We broke below it. It fell today. And we broke below this internal trend line coming from back at the March 2020 lows. I wouldn't be surprised if we don't come back to this big, thick red line right here. See that big, thick red line? Do you see that big, thick red line? All right, I think y'all get it. That's the March 2020 highs once again. I know y'all tired of hearing me say that big, thick red line. I think y'all knew exactly what it was when I said it. But this is key support now, okay? We might come back and test this 170.56 level, which is $2 from where we closed at right now. We closed at 172.49. That March 2020 highs, it look like it's going to get back into play now, all right? But that's key support. Hopefully it doesn't break that. If it break that, look out below, okay? So now let's finish up with the ITOT. Okay, the ITOT, it fell apart today, all right? It closed back below the 21-day moving average, and it closed back below the 5 and the 9. The remaining shares that we had long of the ITOT, we got rid of it today, okay? There's no question about that. So here's the 21-day moving average. Here's the 5 and the 9, okay? We traded above, we closed right on the 21-day yesterday, Monday. Today we traded above it, opened above it, traded above it, but it got rejected, and it fell right at the 21-day here, and it crossed below the 21-day, and now we broke below the 5 and the 9, and we closed below the 5 and 9. Look at that volume. On the down day, look how high that volume is compared to yesterday. Clear distribution. We closed out the remaining shares that we had, okay, in the ITOT. That's done. So we don't have any positions in the ITOT or any other major indexes as of today because, like I said yesterday, as far as the major index ETFs were concerned, the ITOT was the only one we had left. Okay, so now look on the structural chart. We right here at key support. We closed on it almost to the penny. To the penny. At 84.63 is where we closed. This support level right here, this horizontal support level, is 84.59. We closed at 84.63 today. Almost to the penny. All right. So if we break that, I'm looking for a retest of this downward internal trend line right here. We break that downward internal trend line, I wouldn't be surprised if we don't come down to 80.63 on the ITOT. I would not be surprised if we don't come back and test these lows. I would not be surprised. Okay, so that's the major index on the daily chart, the major index ETFs on the daily chart. It's not much to go over right now. We did a lot of it yesterday in our meeting. The fact of the matter is we closed below the 21-day and the 5 and the 9 on all the major index ETFs right now, okay? That's not good, all right? If we can't hold those key moving averages, we can't hold these resistance levels, okay, well, which was prior resistance and now acting as support, we couldn't hold it. We broke back below most of the support levels today on the structural chart. That's not good action after we had a follow through day. Now, look at the sea of red. Look at the sea of red we got here on our sentiment page. You see the Dow Jones closed down 1.5% basically today. The NASDAQ closed down 2.9%. And the SPY, the Standard & Poor's 500, rather, it closed down 2%. So everything closed down almost 2% today. Look at all the major index ETFs right here that we just went over. Everything is in the red. Not one is in the green. Everything is in the red and everything is down. The Q is down over 3%. ITOT almost 1.5%. Okay, the SPYs is down over 2%. The DIA is almost 2%. So IWM almost 2%. So as you can see, it was a really, really hard down day today in the major indexes. That's not what you want to see after we had a follow through day. Okay, you don't want to see that. Now, as far as the FANG stocks, look at them. Look at our FANG MT stocks. Look at them right here. These are our FANG MT stocks. Look at them. Netflix down over 5%. Amazon, which we closed out the other day, is down over 5%. Apple's down almost 3%. Microsoft down over 3%. You can see the sea of red. Now look what's up today. Okay, look what went up today. All right, so this is telling you, this is a warning sign. We got to be careful. Look what was higher today. The TNX.X, the interest rate, the 10-year note rate, the yield, the TNX.X was up. Okay, not good. All right, that's not good. Oil up today, over 2%. Now look at the sector ETFs. Only one sector was up. That's energy, basically oil. Okay, and we talked about that yesterday. In our session, that oil was looking like it might want to bounce off of some key levels. All right, now we have to see how this play out. But we opened up a small position in oil today. Okay, we opened up not oil well, actually we did. We opened up a small position in the oil stock today. I believe it was ExxonMobil, XOM, and we opened up a small position in the XLE right here. But we talked about it yesterday in the class that the energy stocks, the oil stocks, may be looking like they're ready to bounce. So we took a small position in an early entry because of lowers, right? Lowers didn't actually signal, but it was looking like an early entry could be taken. Okay, so this is a very speculative play, right? It's not confirmed. I will do a video on that in the morning, tomorrow morning, and I post it tomorrow morning. But we did take an entry in XLE, the energy ETF, and we took an entry in, I believe, with ExxonMobil, and we're looking at Chevron. But we haven't. I don't think we took Chevron yet. Okay, but I will update y'all on that first thing in the morning. Okay, but lowers did not signal, but it looks like it may signal. All right, so we took an early entry in this energy ETF XLE, and I know we got a small position in ExxonMobil. So with that being said, y'all, look forward to the next video. We're going to look at some of the weekly levels, and then I'm going to post some videos about what we did in regards to lowers, okay, in some of these positions. Okay, so see y'all in the next video.